Hey there guys, what is going on? Welcome back to episode 6 of Inflation Reports. And today, friends, we've got some exciting things to look at. So what we're looking at today will be the latest CPI releases, and we will have the CPI release for the UK for March, and we'll also have the release as well for the US for March. So we'll go over those numbers and we'll talk about them, examine them. And what we're going to do, we'll do a deep dive on the UK stuff, and we'll just do a high level glance at the US stuff since we've covered that quite a lot recently. So moving on to our first slide then. So review the US and the UK CPI data. Well, firstly, the first bit of news we've got is that we know in February we had a CPI release of 7.9%, and now in March it has been released. We now have 8.5%. As predicted and as discussed in last videos, we're expecting inflation to carry on climbing, and 8.5 is higher than last month, 7.9. And the question is, where is the top going to be now? That is the question. And will we start to see a rounding off before a top? So a few points to observe. The first thing is even if we do start to see a rounding off, we know that it's quite normal in any bull market for there to be pullbacks, and whether we're talking about asset markets or anything, or even something that we can measure with a graph such as the year-on-year inflation. It's quite normal if it rallies up for it to maybe pull back in acceleration for a period, and then it could carry on rallying up. So if we see a slowdown in the acceleration, that doesn't straight away signal to me that we're definitely out of the water yet, but it's definitely something to consider. So 8.5% in the US, and of course we know that from our studies and what we've been looking at, do they still measure the CPI the way they used to? And we know that over the years they've added all sorts of adjustments to try and dampen the CPI. We talk about the Hedonic Adjustments. So for example, if you purchase a new car, but last year that car, maybe it didn't have all the same technology, maybe this year you've bought a new car, maybe it has a sat nav and auto park features that are new to the 2022 model that didn't exist in the 2021 model. They would do what's called a hedonic adjustment, and they would essentially say the product has got better, even though we know that this could still be the entry level car. But because the product is better, the inflation, they would say, does not exist. So we need to be careful. Are we comparing apples with apples when we look at this historic chart, or are we comparing apples with oranges, which could be argued is the case. So 8.5 in the US, blasting through, and we will see, and we're going to track this, of course, every month we're going to track this, and we're going to see where is inflation headed. So that was the US then. Okay, coming down to the UK consumer price inflation then, let's have a look. So in the UK we've got CPI rose by 7% in the 12 months to March 2022, up from 6.2% in February. So again, we're seeing this increase in the year over year. And on a monthly basis, CPI rose by 1.1% in March 2022. Now that is significant, because if we were to annualize the monthly rise, 1.1 times by 12 months in a year, that would give you about 13%, yeah? 13%. So what we're saying is if this monthly rate continues, 1.1% per month, that would be like an annual equivalent of that would be 13%. So it's really significant, guys. This can help us figure out which way is it going. Are we going higher? Is the 7 going to go higher or lower? And again, my prediction is we haven't seen the top yet. I wonder if we will see double digits. I do not know. So then, guys, for the UK, I want us to take a little look at the detail behind it. We're going to have a little look. So let's go over to my Excel sheet then. This is the gov.uk, or sorry, not gov.uk. This is the Office for National Statistics. This is the data they give us. They let you download it in Excel format. So let's just take a look at this together then, just to give us a bit of an understanding as to what is going on. So we can see the overall CPI year to date, March 2022. If you can see, then do follow along in the table with me. If you're just listening to this, then of course I will try and speak out all the metrics we talk about so you can just listen. But we're looking at the CPI overall March 2022 year to date, 7%. And we can see that what's interesting about this 7% in the UK is that it's not just one particular sector that is driving the 7, but there's multiple sectors with high rates of inflation. So let's just go along the sectors then. The sectors we have are, the first one is food and non-alcoholic drinks. The second one is alcoholic drinks, clothing, footwear, housing, electricity, gas, fuel, furniture, housing and equipment, and maintenance. Then there's healthcare, transport, communication, recreation, education, restaurants and hotels, and miscellaneous goods and services. So all in total, we have 12 different categories. 12 different categories. And if we were to just go along the year-to-date inflation across the categories and just explore that a little bit, well, why don't we look? What is the biggest year-on-year variance? Well, the biggest year-on-year variance would be transport. Transport costs are showing a year-on-year variance of 13%. Also looking very high is furniture, household equipment. That is showing a year-on-year increase of 10%. 10%. So this would be things like whether it's furniture, stuff you might get from various shops, flat pack stuff from IKEA, Argos, these kind of places. I wonder, household equipment, we can have a look, but I think that would include white goods as well, fridge, freezers, washing machines, things like this. Now this is interesting. Housing, water, electricity and gas. This should have a big weighting, I think, but that is up 7.7%. So we'll look into the detail of that in a second and have a look. So I just want to add in here that we can see here the weightings that are applied to each of the 12 categories, or the 12 divisions that are given by the ONS as the different categories of spend. The greatest weight is applied to transport. That's a weight of 13.9%. Second greatest weight is to housing, water, electricity and gas. That's sort of all your housing needs and housing costs. That's 13.8%. And then the third largest weighting goes to recreation and culture. So we can see here that roughly 14% of the weight of the CPI is allocated to housing. When we think about, our personal income and our budget, right? I know for a fact that I spend a lot more than 14% of my income on my housing costs. I think my mortgage repayments alone are about 1/3 of my income. So for me, the weight would look very different. But of course, this weight is trying to reflect as best as possible a very broad group of people with all different situations. And I think we need to learn that lesson, that inflation really depends on who you are and what your spending habits are like. It affects different people in different ways. So, okay, good. So we've looked at the different categories. We've looked at the key categories. That transport going up 13% year on year. I haven't got the bus for a long time, so maybe if somebody's watching and they've got the bus or got a flight somewhere recently, they can let me know how expensive it was compared to their usual prices for that commute. Interestingly, recreation and culture only coming in at 4.9%. We'll have to see what kind of things are included in there because I have no idea. So let's go on then. Let's go on to the detail then. So what have we got? So overall, 7%. We see that. Now this was an interesting split I highlighted. The cost of goods are up 9.4%, and the cost of services are only up 4%. Now, you think about a country like the UK, we're very reliant on imports and buying stuff from China, from all parts of the world where labour is cheaper, manufacturing is cheaper. So it's not a surprise that if there's geopolitical tensions, then that the cost of goods and the cost of imports is going up. So our goods are going up 9.4% year on year, and the services are only going up 4% year on year. So that's an interesting thing to note. So we see food is up 5.8%. I mean, that's quite significant. We won't go too much into the detail there. I want to go down to some of these points that I did pull out of this when I was preparing for this video. On row 119 here, it says, what have we got here? This is under section 4, division 4. So this is this housing, water, electricity and gas. It's got the second biggest weight. So what are they putting into this? Well, one of the things they're putting into number 4, housing, is they're putting actual rentals for housing. Actual rentals for housing. Now, the number they have put for the year-on-year inflation of actual rent in the UK, they've put in 2.4%. 2.4%. Now, I know for a fact that the true number, certainly in the area where I live, has got to be way higher than that. Way higher. I mean, I know people in my personal group of friends and colleagues who have recently moved into rented accommodation or are looking presently for rented accommodation, and the prices are astronomical. And I myself was rented a property a couple of years ago, and that was a three bedroom end terrace house, and I remember paying £850 a month for that rent. And now similar properties are on the market for £1,200, £1,300, £1,400 per month, yeah? And this was only 2 years ago. And so I know for a fact that to say rents are only going up 2.4%, in my opinion, that can't be right. And I've just a quick Google online, a very quick Google, and some data comes up, some property data websites, and they're saying that rents have gone up 8.7% year on year, 8.7. So where on earth the 2.4 is coming from, I mean, who knows? Because it just seems far too low. Okay then, so let's get to the energy section. The energy section, this is a juicy section. Now, electricity, gas and other fuels, they've put 25%. 25%. Well, hang on a minute. My electricity bill has gone up 300% in the month of March. So how is the weighted average electricity, gas and other fuels price only going up 25%? And you see here for electricity, they've got 20%. And for gas, they've got 30%. Now, if you live in the UK, you'll understand what I'm talking about. We tend to pay a combined electricity and gas bill. It tends to come as a package. And we have gas for our boilers, and we have electricity for our homes, just generally for plugs and lights and all these kind of things. And they've got gas at 30%, electricity at 20%. Now this to me doesn't make sense, because I know that my bill has gone up 300%, and I know that other people are in the same situation as me. It's been a big thing in the news about prices going up. Even before the invasion of Ukraine, my energy supplier was telling me prices would go up 70%. So even these figures here of 20% for electricity and 30% for gas, you know, who is paying only 20% more? Because I believe that a lot of people are paying hundreds and hundreds of percentage points more than they were in the last month. So this is certainly concerning, and we'll keep an eye on it, and I'll probably do a bit more research in my own time to try and figure out what are people actually paying now for gas and electric, and maybe I'm just getting ripped off, right? That's entirely possible. So there we go. So furniture and carpets and furnishings are up 15%. When I think of this category, I think of, IKEA and Argos, things like this. That stuff's all up. Why? Because we import it all. It's all imported, isn't it? And we know that those carriage costs are going up. We know that those shipment costs are going up. And we know that supply is being squashed as well due to all the geopolitical challenges and supply chain bottlenecks that are going on. Household appliances, well, again, those are things, generally electric goods that we import from the East. And then this one was interesting, used cars, second-hand cars, 30%. Now this is true about 30%. I've got a car, right? And I'm always looking and have a quick look on WeBuyAnyCar.com, see what it's worth. And there was a period, especially last year, where they would text me every single week, sir, your used car valuation has gone up. It's gone up. And I think it went up about £2,000, which was pretty interesting. But of course, I think that's cooled off now. But yeah, second-hand cars, hard to come by. And we will see, will that taper off as production ramps up again? If production's able to ramp up again, or will second-hand cars continue to go up in price? Yeah, the key things really being that rent figure looks far too low, and the energy figure looks a little bit off to me as well. But without seeing the underlying data, I could be shown otherwise. But there we go. So that was a quick analysis of the 7%. Okay then, guys, I hope you enjoyed this little update, this little March CPI update. Like I said, the trend carries on. The top line year on year is just increasing month after month after month. And yeah, let's look forward to seeing where it goes next. Will we get double digits? That is the question. Will we get that 10 handle? Who knows? We will find out very soon though. So I look forward to the next episode, and thanks again for joining me on this one. I'll see you next time. Bye bye.